Hello everyone, today I will be discussing the comparative balance sheet, the multiple-step income statement, the statement of retained earnings, and the statement of stockholders' equity. Now the comparative balance sheet is simply multiple balance sheets from multiple periods lined up against each other, and it's useful for comparing a company's asset, liability, and owner's equity accounts against each other between periods, so you can see the changes that occurred in these accounts between periods. Now the multiple-step income statement is similar in the sense that it's multiple income statements from different periods lined up against each other. But there's a key thing to notice here. So there's a line, income loss from operations, income or loss from operations, and then it continues with more revenues. And that's because income or loss from operations only includes the income or the loss from the company's core results, which are its main activities. These are the main activities of the business. So that's why they're called the core results, and they go under income loss from operations. And then this is the only one that's not a core result in this multiple-step income statement, revenue from investments. And that's a peripheral result. It means it's a revenue or expense that comes from an activity of the company that isn't a main activity of it. And investments is not a main activity of this company, so therefore it's a peripheral result. So the difference between core results and peripheral results is that the core results are revenues or expenses that result from the main activities of the company, and the peripheral results are revenues or expenses that result from activities that are not the main activities of the company. And the multiple-step income statement is useful for comparing trends in a company's revenues, expenses, and net income over multiple periods. And you can see here that net income increased from 2012 to 2014. Operating revenue increased, and operating expenses increased as well, and peripheral revenues increased. So now the statement of retained earnings follows a basic equation. Beginning retained earnings plus net income minus dividends equals ending retained earnings. And this is how a statement of retained earnings is completed. You start with your beginning retained earnings, you add your net income, you subtract your dividends, and then that number will be your ending retained earnings, which will go on to be your beginning retained earnings for the next period. So, now the statement of stockholders' equity is a little different. Now here, we include how to calculate retained earnings, which is a stockholders' equity account, as well as contributed capital, which is a stockholders' equity account. And contributed capital is calculated by the beginning balance plus the issued shares of stock minus the repurchased shares of stock that were repurchased by the company. Then that gives you your ending balance. So it functions with this same format as the statement of retained earnings equation. You just change what you're plugging in. So instead of doing plus net income, plus issued shares of stock, and instead of minus dividends, minus repurchased shares of stock. So now here you can see our beginning balance is 100,000. We issued 4,000 shares of stock. We repurchased 6,000 shares. So our ending balance is 98,000, which would go on to be the beginning balance for the next period. And with our retained earnings, our beginning balance was 52,890. Our net income was 30,090. Our dividends paid out were 1,000. So our ending balance is 81,980, which will go on to be our beginning balance for the next period. And if you have any questions, please leave them in the comment section down below, and thank you for watching.